Okay. Hi everyone, welcome back to our new episodes of Phillip Trading Podcast. My name is Yongxian, your host for today. And with me here today, we have Mr. Ian from ICE Futures Singapore. Hi Mr. Ian, how are you doing?
Very good. Thank you, Yongshen, for inviting me for this podcast. Very excited to be sharing about ICE Futures Singapore and, of course, one of our benchmark products, the mini Brent crude oil.
Okay, thank you. It's good to hear that you're doing fine. So, without further ado, let's start for our Q&A session for today. So, my first question to you, Mr. Ian, can you briefly explain about the exchange ICE and ICE Futures Singapore?
Sure. So I'm sure that you people might not be familiar with the name ICE or Intercontinental Exchange, but you definitely know the benchmark products that we have. Let me quickly share on my slides a overview of the exchange that ICE operates around the world. So if you see my slides, so ICE actually is very much a data company. There are three pillars to our businesses. One is the data services. We have a US mortgage service company as well. And thirdly, the one of the main branch of our business is running and operating different exchanges around the world. So they all are branded under ICE, but they're all spread around the world. Each of the exchange is regulated and distinct and different from all the different exchanges. So, like I say, you might not know of the name, but you definitely must know of the products because let me highlight to you. For example, in the US, in America, we have ICE Futures US, and ICE Futures US have all our benchmark soft commodities, things like our coffee futures, your cocoa futures, your sugar futures. Um, we also have what we call our digital asset or the Bitcoin futures that's also sitting on our ICE Futures US exchange. In the US, we also own the New York Stock Exchange. So ICE also owns the New York Stock Exchange. So in terms of all your listings on the US, it's also under our New York Stock Exchange. Uh, in our ICE Futures Europe, there is of course our benchmark, our ICE Brent Crude, and all the different other 126 spread contracts that we have there. Um, we of course have our European fixed income, things like our long gilts or Euribor futures. That's all sitting under our ICE Futures Europe that is based in London. We have an exchange called ICE Index in the Netherlands. They deal mostly with the power contracts, and most recently, the name that is trending is the emissions futures, things like your EUAs, which is very in topic right now. So you have the news on. You always talk about emissions. That's all housed under our ICE index, and that's why I come to ICE Futures Singapore. How do we come into the picture for ICE as a group? ICE Futures Singapore is the representative exchange for ICE in the Asia Pacific region. So what we have been operating. We are very young, only 2015. We started this exchange in Singapore. It is of course regulated by MES, our regulatory authorities in Singapore. Um, and how we build this exchange is we build this exchange is specific for the Asian traders who are looking at opportunities for all our benchmark products, be it your Brent oil, be it your USDX, be it your other benchmarks that you see on our other ICE futures exchange. We brought it all into Singapore and made it a mini and micro size, and we made it cash settled, meaning you don't have to worry about delivery, you don't have to worry about getting a physical crude oil, for example, Brent crude oil. Um, so I like to also give like kind of an overview. These are some of our more popular contracts that we offer on ICE Futures Singapore. So in terms of equity derivatives futures, which is very popular in Asia, we have the Micro Asia Tech 30 Index, which comprises of the 30 top uh, tech index in Asia. We have a Micro US MSCI US Index that benchmarks on the US equity stocks movement. Of course, on the energy side, we have the mini Brent Crude, which is one of our focus products for today's podcast. We have, if you are dealing with FX, you definitely know about the US dollar index. And the US dollar index, we have a mini version that's sitting on ICE Futures Singapore. And also we have a digital asset future, which is a Bitcoin that's sitting on ICE Futures Singapore. So that gives you an overview of what ICE Futures Singapore offers and how do we fit in or as a exchange across all the ICE different ICE group as well.
Great. Yeah, I think it's quite interesting products that ICE Futures and Phillip Futures are offering. So for the upcoming 3 questions, so will be slightly regarding about Brent crude. So my first questions will be on the ICE Brent futures contract is also known as the world's crude oil benchmark, but some reports suggest that there are a difference between the price of Brent and the rest of the oil market. So may I know what's the difference between the ICE Brent crude and the rest of the oil market?
Right. So the two most popular Brent, if you look at any of the news and any of the market overall summary, especially now with so much volatility in the market and the war, you definitely would know the ICE Brent crude. You might not know it's by ICE, but you'll hear Brent crude, and of course you'll hear the WTI, which is under the NYMEX WTI. So the main difference is, I'll highlight some difference, and we have a great article that we have shared with Phillip Malaysia, and they have the article. If you're interested, more than willing, you can go and request from Phillip Malaysia this article that we have commissioned that tells you the difference between the ICE Brent versus the NYMEX WTI. So one of the difference is the ICE Brent, it's a waterborne crude. So actually it's an index that is a basket of 5 different North Sea crude oil futures. So they're commonly known as the BFOET. So this is where from Norway onwards, it's sea-bound. It's drilled from the sea. It's the rigs are on the sea, and this is what they call the waterborne crude. Benefits and differences. Well, it means that it can be shipped anywhere. As long as you have a ship, you can get the oil from the oil rig. It doesn't have limitations on storage. I'll come to that a bit later. And it's definitely more flexible because you can store it anywhere. It doesn't have to be land bound. It can be on the ship where you're storing the crude. So the OPEC, I'm sure you're very familiar. This is a group of the 13 most powerful oil exporting countries, right? They use Brent, not WTI. They use Brent as their pricing benchmark, right? So you can look at it as the waterborne crude. It's an internationally recognized, used for all the different brands, 80% of the brand in the world. Then what's the difference with WTI? Oh, so WTI, it's a very regional landlocked crude. That means it's in the US, in Oklahoma. It's in that part of the US. That's why it's called WTI, is the Western Texas Intermediary Crude, right? So it's a land bound. That means the rigs are on land, and is very much affected by that regional issues or things that are happening within that region in the US, right? If there was a hurricane, if there was flood, blah, 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 so on and so forth, that would affect that pricing. And that is land bound. That means they can only go to one point of delivery, which is in Cushing, Oklahoma, right? So unlike the Brent crude, where it's all in the North Sea, you have a ship, you go there, you can pick it up, right? But this one, you have to all go to one storage facility to pick up the crude, which complicates matters. That's why you have seen WTI went into negative, because it was a perfect storm, lack of there wasn't enough storage, and there was issues in the market. It causes the Brent to go into a kind of a negative environment. So the Brent really reflects the global market oil fundamentals, right? So the WTI is very much regional towards the US focus. So that's the big two difference, right? Um, and you will see that what things that affect Brent are more global in nature. Currently, the war definitely is affecting the price of Brent. And if you have, I'm looking at my charts right now, and I see you'll see a price difference between the WTI and the Brent. The WTI is priced slightly lower than the Brent itself. Yeah, it used to be inverse, but right now the relationship has changed from several years back, because now it's more expensive to actually extract oil from the sea rather than from the land. So that's why there's a slight difference in pricing. Um, so the factors that affect, if it's global in nature, if it's OPEC region, they all use Brent as a price benchmark. So your Middle Eastern, your crude from Europe, they're all priced using the Brent pricing as a benchmark rather than the WTI. And also, I would also like to touch on the participants. One of the main differences of the participants of the Brent. Uh, the Brent has a higher proportion of commercial participants. So what are commercial participants? Commercial participants are your producers, your refiners, your physical traders, and their goal is to manage risk. So you do not see sudden spike in huge jumps in prices. If there was no huge market volatility, usually there isn't an issue because they're managing their risk rather than taking risks, I guess. So in a way, the pricing is much more smooth rather than the WTI, where there are quite a fair bit of non-commercial uh, participants. That means there's a higher number of non-commercial participants, so they are trying to take risks within the markets rather than to manage their risk. So that also has given there's also a big difference. We have a study that we did in terms of the volatility of Brent versus the WTI. And over a 5-year period, we did a study from 2015 all the way to uh, 2020. Yeah, a 5-year period. The Brent volatility average is about 3% lower than WTI. And so these are the main differences, I would say, for Brent versus WTI.
Okay, so the first one will be on Brent Crude will be on water bond, and then another thing is the commercial participants. Yeah, this is the main one. Okay, so for my third question, what do you think about ICE Brent Crude for the rest of 2022? As ICE Brent hit the highest at the price of 123 on early of March.
Great question. I can't give a market view about pricing due to my compliance and regulatory commitments as an exchange person. However, we have a market researcher just on oil that's based out of in the US. His name is Mike Whitner. So we actually produced a market outlook for this year in a 10-minute short recording. And so Mike has given his view, and also it consists of a very short term as well, short to medium term. Of course, the prices are moving like crazy, as you know, because of the volatility in the markets, especially with the Ukraine-Russia conflict. But I think his view is very interesting. So he talks about supply and demand, and where does he see kind of what the range of the price of Brent. And that, I believe that Phillip Malaysia will be sharing with you for the next podcast. It's a short 10-minute video. So look forward to that and to our global head of oil research, Mike Whitner's presentation.
Great. Yeah, we will be sharing the video. So if you are interested, please follow and like our Facebook page to update to the latest video. Okay, next, for the last question will be, what can traders do to capitalize on the strength of ICE Brent Crude?
So, like I was mentioning, the benchmark futures contract, the ICE Brent, is 1,000 barrels. That's actually listed on our ICE Europe exchange. Some of the restrictions or some of the participants who just want to take smaller opportunities within the Brent market have difficulties because there's a very high market data fee, for end user fee as we call it, because this is actually meant for very much the producers and the refiners. So therefore, one of the excess issues is market data fee, the higher margins, because it's 1,000 barrels, so you get 1,000 barrels, you multiply by what is the price currently, let's say over 100 at least, right? And you know that's the notional value, so the margins are high. The market data fee is high as well. So these are problems. So if you are you just want to, you speculate, or you just want to hedge your exposure to other global inflation issues, or even global geopolitical matters, it will be very difficult to use the ICE Futures Europe contract as a hedge. So what I've shown on my screen is what we have. Like I say, we've taken the mini size contracts and put it on ICE Futures Singapore. So ICE Futures Singapore, we have a mini contract. So again, it's the same. It just takes the price from our ICE Futures Europe contract, and the multiplier is 100. So when I was doing this presentation, this PowerPoint, it's at $105. So that will multiply, the notional will be at 12 over to about US $12,000. The initial margin is about $1,300, and there is no data fee on ICE Futures Singapore, no membership fee for ICE Futures Singapore, and you can see that the exchange fee is only 9 cents. So it's all very convenient and accessible to the retail participants. So for traders during Asian time zone that would like to take views on the Brent crude, rather than to go to the regular size contract, they can also take a look at the mini size contract on ICE Futures Singapore. So there is an opportunity to take exposure during Asian time zone.
Okay, great. Wow, I do learn something today. So thank you, Mr. Ian, for the great insight about ICE and also Brent crude. So I really learned a lot from this 10-minute podcast session. Okay, so we will have another session on the other products that we will be offering and will be coming up soon. So remember to follow our Facebook page. And that will be all for today's episode. Thank you, and hope everyone enjoyed the podcast by Mr. Ian. Thank you, and stay safe, everyone. Bye-bye.
Bye-bye. Thank you.